The Oneaters? No, the Wonders. Where are you? Oh,
I
there
don't
you are.
know.
I almost left you in Italy there for a second without turning your microphone off.
Cannoli, baby. But what if I buy that cannoli and the 4% and I charge it on my card?
Yes, Jon Durbin joins us on the phone. Has a resume to really back his expertise on payments and how the payment process works. He worked for WorldPay until starting his own business about a year ago, and you have helped small to medium-sized businesses, even in our area, some large businesses as well, across the country, handle this because it's an increasing issue that that businesses are having to figure into their monthly statements and budget and everything else. So Jon Durbin on the phone with us, kind of give us a 30,000-foot view of this problem for retailers.
Absolutely. Thank y'all for having me on. It's been quite interesting, just the program and the emergence over the last 3 years or so. As I heard you mention earlier, that there's a lot of government utilities, things along those lines. People are used to, our children's tuition. Whenever you pay a lot of these different things with a credit card, there's a fee assessed on top of it because they don't have the ability to write that to absorb that cost in operating their business. And historically, surcharging has been legal in Louisiana for several years. It actually went back to the Durbin Amendment, which there's no relation, but it was an amendment that was more the looked at the rights of the merchant and how these fees are assessed. So within the credit card processing industry, a majority of the fees that the merchants are paying on a daily, monthly basis, annual basis are going to the issuing bank or the issuer of that card. So if you have a United Airlines rewards card, you're going in and the business that you're patronizing is paying for your miles. So they're paying 3% on that transaction that you're going in to buy to then credit the consumer those miles for their card.
Gosh, I don't think people realize that, Jon.
Yeah.
Yeah, many don't, and unless you've been in the industry, you just don't. So what they did with the Durbin Amendment and surcharging specifically was done. So if you went into a business and you used your debit card, which there's a federally regulated rate that can be charged on a debit card, it's 0.05 or 5 basis points and 22 cents. That's the most an issuing federally regulated bank could charge on a debit card. So the way the surcharging program works is it's actually the merchant is supposed to pay that fee for the debit card, but then they can surcharge on anything else other than the debit cards because typically they have a much higher cost of acceptance.
So let me just stop you there. So when I go to a store and they ask debit or credit, and I'm using my debit card, but I want to run it as credit because I'm too lazy to put my PIN number in, that merchant is actually paying more?
Correct.
Wow. Yep. Unreal. Didn't even realize that.
Excuse me. If it is a debit card and it's a federally regulated debit card, whether it's swipe and signature or PIN, it is actually the same.
It's the same. Okay. Gosh, I started feeling really guilty about myself, Jon. But anyway, okay. So this obviously, I've talked to some different business owners, and obviously the conversation here in our area has revolved around restaurants. And talking to a specific restaurant owner who said, fees, a few years ago was about $1,800 a month. I mean, which is a huge chunk of change. But in recent years, it has grown at different paces in their actual sales to now be over $6,000 in fees.
Yeah, I mean, and you look at the margins on restaurants or the margins on specific businesses. I heard you mention earlier. I mean, they're very, very, very tight. And when you look at what a restaurant that's fairly successful, and they could be paying $30,000, $40,000, $50,000 a year in fees, and you think about what those types of things could help do for the restaurant.
Yep.
Maybe bring in fresher ingredients, or hire more staff, or do a remodel, or different things along those lines. And it's very, very challenging operating as a small business, as you mentioned today. And I think people just don't understand how much these fees cost. Other than their lease,
yeah,
this is the second highest business expense
I'm so excited to talk to you because I think it's a sector of the economy that people don't even realize exists, John. People don't even know you exist, John. But folks like you can come in and sort of help these businesses get things under control, get things
better
on track and a little bit more even.
And the thing of it is, Jonathan, that dispel the myth. I think people think that when you go into business, you're suddenly automatically wealthy. and I don't think people really understand how hard some of these people are struggling. I have a friend, and I know he's barely making it. He's barely making it. And he's been a business owner for years. And the cost of doing business keeps going up. And he's trying not to pass things on to the consumer. But, business people don't just, because they start a business, suddenly become these wealthy people who are rolling in cash.
You're absolutely right. And you know who is the ones that are becoming wealthy? If you've noticed some of these large acquisitions lately, they hit two of the largest payments acquisitions in the history of the industry. Fiserv bought a company called First Data. That's one of the largest U.S.-based payment processors. And more recently, FIS or Fidelity acquired WorldPay in I think a $34 billion deal. So there's
those 4% surcharges add up, man.
Money.
Yeah.
There's a lot of money that's being made by the issuing banks and the different companies that are tied to it, and the networks too. Visa, MasterCard, American Express. I mean, these networks take a piece of the pie as well on every transaction ran, and all those fees are ultimately paid by the customer.
Okay, so we're gonna wrap up with you, John. Thanks for taking the time, by the way,
this is
for us.
amazing.
But the debate seems to be here in our area over whether or not. Okay, so let's just accept that the fee has to be paid some kind of way.
Yeah.
Then there are three options. There's either that the business absorbs them and doesn't charge their customers even more. In my opinion, it's terrible business practice because you're really just cutting into your margin. There's also the option of, do we put it on the receipt as the receipt had been shared around here, 4% for non-cash payments, or do you just raise your prices for everyone 4%? And that's the conundrum that these business owners are dealing with. What's your experience?
So there's two differences between a cash discount program and a surcharging program. So surcharging is still illegal in California, Colorado, Connecticut, Florida, Kansas, Maine, and Massachusetts, and Oklahoma.
Okay.
New York and Texas just legalized surcharging, which is a huge movement. I would imagine the rest will follow suit shortly.
Yeah.
Everywhere else, it's illegal. Cash discount was a program that was created, in my opinion, ultimately to skirt around the laws of surcharging. Basically, it was done so these merchants had the ability to surcharge, even though it may or may not have been legal in their state. So the surcharging program, eventually, I think what we will see will be adopted as where you pass on the fees to the merchant. The cash discount program, especially with the pressure of Visa recently, is that they are saying if you are doing a cash discounting program, you should raise all your rates exactly what you just said by 4%, and then offer somebody a 4% discount if they come in and pay cash. Because if you're not doing that, essentially you're
surcharging. Yeah.
Right.
Yeah.
Wow. God.
Yeah. Well, Jon Durbin, thanks so much for your insight. It's I think people don't think about it a lot. And coming up, we're going to talk to Jackie Russo, who does branding for us and talks branding efforts. There are a lot of people who it doesn't matter what it costs or how much they have to pay. They love a product so much that they're going to go there. But I think we might see more and more of these situations. I know here, John, I think it's Costco. I'm pretty sure Visa's the only card they take. And so if you don't have that insignia, then you need to pay in a different way. I'm pretty sure it's Costco, but I would imagine it has to do with these rates, these transaction fees that are actually taking place.
So,
all right. Jon Durbin, thanks so much for your time this morning. We appreciate it. 7:35 now at News Talk 96.5. KPEL, we had someone who's waiting patiently on the phone at 232-1542 and through the KPEL News app. Good morning. You're on with Rob and Bernie. What are your thoughts? Are you there? Are you there?
Yes. Can you hear me?
Yeah, we can hear you now. What are your thoughts?
Okay, great. Hi, this is Rick Soom. I'm the CFO of Reverse My Fees. I started the company 3 years ago in our state, and I just listened to your previous caller and wanted to add some things because we have thousands of clients all across Louisiana that are doing cash discounting, and there are a couple of points that are being missed that I think your public needs to be made aware of.
All right. Well, first of all, let me ask you this question, because do
Sure.
you think the cash discount thing is skirting the surcharge laws?
No, it's not. We're Visa and MasterCard regulated, meaning we couldn't be in business because we're in a federally regulated environment. And we go through audits quarterly and monthly on all of our programs. And a couple of things, the Supreme Court ruling that came down in 2012 that shifted this back to the client had nothing to do with the federal regulation. It had to do with the way that Visa and MasterCard were operating their business. They got fined $8 billion for overcharging merchants. So they're not a regulatory authority. They would love to have everybody get rid of cash and let them be the monetary system for our market.
Mm-hmm.
And that's just not how it operates. So doing cash discounting, there's one key component to this that everybody's missing, and that's the fact that whether you're surcharging or doing traditional processing, at the end of the month, Visa MasterCard comes in and pulls that money out of your account as a merchant. The only way to not do that is through cash discounting because the fees cannot be retained by the merchant. It goes directly to pay for their processing fees.
Interesting.
So historically, what would happen is even if no matter what program I'm on, they're going to come in and they're going to rake that money out of my account because I've signed an ACH agreement in order to even take your business cards. And they'll pull that money out. So now I'm, as a merchant, I have to sit all month not knowing how much is going to get pulled out of my bank account and wait for it to happen. That doesn't happen with our program. So
interesting. Let me just ask you this.
Yeah.
Because obviously you mentioned at the beginning of this that you are a CFO of a company who does these cash discounts here in our state.
Sure.
You wouldn't be in existence if there wasn't money being made off this, right?
Yeah, well, all processors have some small portion of it that's a profit to their company. That's been since the beginning of time, or we wouldn't be in business. We have to, there is a percentage of that goes back to the processor as profit. That happens. That's just the course of being a processor.
Mm-hmm. Interesting.
Mm-hmm. So,
okay. Well,
and it costs more to do because it's regulated more heavily and monitored more heavily for fraud.
Interesting.
So,
okay.
The merchant has a choice. They can either process traditionally and then sit back. I talked to a gentleman last night because of your article yesterday who called me, who's a restaurant owner, and their fees are their absolute biggest bill. Yeah. Usually processing fees are the first or the second largest bill that a restaurant owner or any merchant has.
Interesting.
And if you can't calculate it and you can't see it and you're waiting for the end of the month for that to draw out, that's what put them out of business. Their fees were $8,000 a month.
Wow.
So,
all right.
Again, and in the middle of this, we've got Samuel Jackson on TV touting Capital One's latest cashback rewards card, 4% on some purchases. That money's got to come from somewhere. And it is absolutely crushing local businesses when they don't know what card brands are walking in their door. They can't tell if it's a rewards card or a corporate cashback card or the most expensive card out there. When they run it, they don't know. And then they're going to wait till the end of the month and Visa, MasterCard's going to pull that money out of their account. And then they can take a breath and try to figure out the budget for the rest of their business. So by using our products, it enables them to continue focusing on the quality of products that they offer in their business instead of having to budget and wait for an inevitable, yank out of their account. Some people will put that into their product or put that into their staff or put that into their marketing are actually growing their business and not hurting their business.
All right. Very
Right.
interesting
Quality
insight.
stuff.
Yeah. Thank you so much. We've heard all parts of this whole situation
and
today.
here's the
And
crazy
thank
part.
you, sir.
The consumer,
Yeah.
the consumer does not know. The consumer doesn't even think. I mean, they should know because
Right.
it's a huge cost.
Well, I mean,
I'm telling you, it makes me want to go to a mom and pop for lunch today.
yeah. Yeah.
Makes me want to maybe buy that whole bottle of wine. You know, I mean,
Whole cigar,
whole cigar.
whole pipe tobacco.
These places, you
And
know?
then, for that industry, think about
And you know what?
all the other taxes.
I'll
on
tell you
that.
this: as much as I love the rewards points, it almost makes me want to go. I want to use a $20 bill.
I mean, think
You know
about
what I mean?
that.
Because think about that's completely
I
different.
never thought about that side of it when it came to the rewards. Yeah, duh, Bernie.
It's all
Somebody's
about
paying.
it's all about convenience for us. So we use our card, we use Apple Pay, and
Sure.
everything else.
Sure.
Eye opening. All right, thanks for jumping in. By the way, on the conversation, you guys are still talking about it over at kpel965.com and on
fascinating.
our Facebook page,
Yeah.
KPEL News. All right, 7:41
Ask
now.
a business owner, people. That's the other thing I want you to do. Ask them to tell you their story. How long have they been in business? How hard was it? What is the percentage of businesses that fail in the first 3 to 5 years? Isn't it like 85%?
It's huge. It is huge.
Yeah, I think is it close to 85%?
That wouldn't surprise you one
I'll
bit.
go and look it up.
All right, it's Monday,
Forbes.
April 1st, 2019. Great conversations happening as always. We're going to take a quick break here.
More coffee.
Well,
Can I have a cappuccino? Did you get me an espresso machine while I
No.
was gone?
those days are over.